Hey everybody, hello, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Welcome everybody, welcome. We made it to the end of this week. Today's the 22nd of August, 2025. Oh, by the way, this is a video preview for the webinar, which is going to happen in a few moments, so do not tune out. Look, we have an interesting day because everybody was waiting for this day. It's the, Jackson Hole and Jerome Powell speech. I just hope that the speech will be living up to the standards of the whole hype, So anyway, let's see what's going to happen. Let's dig into the markets. There are other economic data sets which I want to pick up on, and yeah, we'll go from there. Ladies and gentlemen, I'll see you in a bit. All right, ladies and gentlemen, hello, good morning, everybody. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. Sorry about the little pause there, because again, something happened with my camera. I had to quickly restart it, but hey, running. Yep, you can see me, you can hear me. Hopefully, you can. Ladies and gentlemen, welcome. Today is Friday. Today is the last trading day of this week. Today is the 22nd of August of 2025, and yes, we are in this day when we're going to be getting the Jackson Hole Federal Reserve Jerome Powell speech. Look, why I'm putting so much, oh, what's the word for that? SaaS or something like that, on it, because the whole market was just buzzing the whole week about this speech and how important it is. Look, I hope it's gonna deliver. He's gonna deliver something that really will, I don't know, should move the market or anything. Because at the end of the day, it is something that we already know what's going to happen. I think that everybody's more curious about if they're going to do if they're going to do a cut actually, or if they're still on track to do the cut. If he suddenly says that they're not, then there's a bit of a bummer. Look, before we jump into all that beauty, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yep. So also something that I wanted to mention here. Oh, why is it skewed like this? I mean, honestly, like there we go. Need to fit into the frame here. Look, Markets.com website. You can check it out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, also something that I wanted to mention is this. This is the upcoming webinar next week on Thursday, which I'm holding. It's a closed one. You need to register for that one. Basically, it is about the indicator MACD. We're going to look into that. We're going to try to apply it on real life market action. Yes, so to see what's working and what's not. And yeah, hopefully you'll enjoy it, because like I said, we'll try to place some live trades on the demo account, because again, we're trying to see if the MACD is working correctly or not. But yeah, tune in. Honestly, what else can I say? Tune in. Oh, I can see Anish Pawar. Hi, good morning. Damn it, you beat me to it. This is what I wanted to do. Good morning in the chat room, because I normally put one day that I missed to put the first one to put good morning in the chat room. Anish, you beat me to it. But anyway, thank you very much. Good morning, everyone. Thank you for reminding me. There we go. Good morning, everyone. And yes, thank you very much for tuning in. I really appreciate your time. Look, so yes, tune in to this webinar. You can find the link in the description of this webinar. Ladies and gentlemen, let's have a look what's happening in the world. Japanese Nikkei 225. Look at this beautiful reversal back up here. I talked about this, and I said to you that Look, what I'm keeping an eye on here is this hurdle here, roughly around the 42,500 zone. This was my initial target, but then okay, we surpassed it by a little bit and we rebounded, and now it seems that it's showing some willingness to push back up. Anish, hey, how are you doing? I'm doing good, honestly. I'm running a webinar, so I'm doing good. No, in general, with jokes aside, everything is fine, everything is okay. But yeah, look, I hope you're doing the same good. So I hope the markets are treating you well. But look, if you have any questions, honestly, ladies and gentlemen, whoever has any questions, this show is all about. You can throw it out. If I know the answer, I'll tell you that I know the answer. If I don't know the answer, I'll say that I don't know the answer, but I'll get back to you with an answer in the next show. So coming back to Nikkei 225, we are seeing here a nice rejection here in a way. Well, we did pierce through this hurdle, but we're now climbing back above it, and we're currently staying above this hurdle. So if we continue to trade above this, what I was talking about in my previous sessions, that maybe, just maybe, again, don't shoot if I'm wrong, we could be forming something of a head and shoulders pattern here. So we have the left shoulder, we have the head, maybe let's form the right shoulder, and this could be our neckline here for the future. So but again, ignore all this idea if we do clear this 42,500 zone. If we do that, I'm leaning towards a larger correction back down. This morning we got the Japanese data, inflation data, so it came out on the lower side here, so the 3.1 against the previous 3.3 and the headline year on year. Core year on year headline, core year on year, not headline, it came out lower as well. So basically, this is kind of putting the BOJ at an interesting spot. Let me just double check look. We know that Japan really wanted to go for those rate hikes. But we know that they have a new party that came in, kind of stirring up the balance inside their ruling house. So and we know that the new party that came in are more kind of towards the rate cuts. So in a way, the fact that the inflation kind of started drifting a little bit to the downside, that is in a way a good sign for that new ruling party, because then they can support the rate cuts. Now look, in terms of in terms of rate cuts, I would say it's there's not much to cut. In a way, it's plus 0.5 on the on the BOJ side, basically, yes. I mean, if they're gonna cut, they're gonna cut to 0.25 or something like that. I mean, I really doubt that. Let me just open the interest rate chart just a second. JP in Japan interest rate. Yes, I think too many Japans. There we go. That's what I'm talking about. So look, they have hiked their rate quite significantly recently, and significantly in relation to where they were in February of last year. So we're here, and of course we were higher before in the beginning of the 90s, but now, I mean, okay, are we gonna go there? I don't know. I mean, it's a different economy. So if they're going to go to 1%, I mean, okay, they need to have really strong inflation, really strongly rallying inflation. So at this point, I think it's going to hold around here somewhere. If they somehow manage to drop inflation and maybe drop it back to 3% or something like that, or actually no, not even 3%. What was the number? If they manage to get it closer, let's say around 2.5, then we could see maybe the Bank of Japan actually considering the cut of I don't know by how much, but certainly maybe again going back to the levels of around 0.25, or again it's we know that they can do 0.15 cut as well. So yeah, let's not over speculate too much on this one, but what I would like to say is that at this point, if we're applying if we are applying technical analysis on this chart, well, you'll see that we have found good resistance near the 0.5%. Look, again, you don't look at it from that perspective, but in general, it's an interesting point. So this is a critical level for the BOJ. I don't think that they're going to surpass that in any time soon. But to drop it back down a little bit, I don't know. They would have to change the then they would have to go for more downside. But again, it all depends on the inflation and how it will progress further. If it's going to go down, we could see an interest rates going lower here, and maybe this could boost the Japanese Nikkei a little bit further. We know that we can see that now we're getting that boost because again inflation came out on the lower side. So let's see if if there is some still positivity, because there in Jackson Hole we have the BOJ governor as well speaking. So I think investors will be looking at that one as well. Anish, I can see your message there. You're 24 years old, learning about the market and trading, excited. Any suggestion you want to give? Risk management. Risk management, it's important because again, I'll say it's a separate topic, and by the way, join my webinar next week on Thursday. Like I said, you can find the description in the link in the link. You can find the link in the description of this webinar. So yes, I'm going to talk about MACD. So one of the indicators, if you are at this stage, basically, I think it would be useful to understand that indicators are great, but you have to take them all with a pinch of salt. And in general, like I said, it's a very big topic. I wouldn't be able to kind of say everything in right now in a few words, but if I would try, then I would say try to control your psychology. Try to control your appetite, your risk, and let's say if sometimes when you make a 1, 2, 3, 4, 5 trades in a row which are successful, that's what can actually put you down very quickly, because again you get this you get into this invincible mode. So this is what you need to control, your invincible mode, because you might think it's a piece of cake, I'll just what if I increase the trade side, and once you do that, straight away, boom, you get wiped out. So again, it's a big look. You can always, I would say this way, that I'm always open to communicate with people, and look, I can share my my perspective, and you can always find me on LinkedIn. Feel free to to kind of message me there, but just before, let's say, adding me, message me, just kind of explaining who you are, because again, I don't add just random people or anything like that, but just explain me who you are, where where you saw me, and then or where you found out about me, and just kind of, and we'll go from there. So so yeah, like I said, but I'm always happy to communicate, so let me know. So now then, looking at the situation here with the Japanese Nikkei 225. So yes, we're watching this carefully. We're keeping an eye on the barrier here, this hurdle, this 42,500 zone. If we continue to trade above it, I'm leaning for a little bit of a retracement back up. Jumping into China very quickly. Boom! There we go, China. There we go, China 50. Amazing, amazing. My target has been reached. I was aiming at the beginning of this week. I said, if we're going to stay above this 14,100 kind of 78 zone, 70 zone, 80 zone, something like that, then I will go higher and I will target the 14,000 kind of 590, 600, something like that. And there we go. Amazing result here. Wonderful. Testing this area right here, and actually surpassing this area. So Okay, look, now I would say this way. Of course, as always, I'm gonna continue leaning towards the upside, but I do accept the fact that there could be a little bit of a retracement back down. So let's not rush into things. And I would say this way: if we do get a little retracement back down, then keep your eyes on this little hurdle, this 14,600. If we can stay above it, then yes, I will kind of let's say continue targeting the upside, but if we somehow drop back below it, if we do fall back below this area and hold and stay below this area, then yes, potentially more sellers here could join in. So yeah, keep your eyes on this one. By the way, Anish, so you're starting off in trading. Any specific instruments that you really like to trade, or maybe you haven't traded yet? So I mean, if you haven't traded yet, then that's perfect, because if you're starting out, you need to jump on a demo. That's the first thing. You need to find your strategy, then you jump into live. Anyway, so coming back to the situation here, China, yes, okay. Look, for now, like I said, I will not do anything here. I'm just going to observe the price action, and I want to see what's going to happen with this hurdle right here. Dow Jones Industrial Average. So beautiful retracement. Everything's fine. We did get a nice pop on Tuesday. Pop above this hurdle, this 45,000 zone. Then we retraced back down, but oh yes, you love trading BTC USD and NASDAQ 100. Okay, look. These are, again, every instrument, I have to tell you that every instrument moves differently. So if you apply one strategy on one, then you need to kind of apply a little bit of a different strategy on the other, because it's not as straightforward as it seems. So yeah, be careful. Be careful. That's what I can say. And like I said, there's much more to this, and I think that yeah, it's you need to be kind of, like I said, a little bit on the careful side. Like I said, there, like I said, if you ever want to communicate or discuss, feel free to reach out on LinkedIn. I think that's the best platform for now. Look, what can I say? For now, I'm looking at this way. Looking at this, if we can clear this upside line and we can drop below the 44,300, then yes, I'm leaning towards the downside. But certainly, let's not rush into things. For now, let's just keep an eye on the barriers right here. So, of course, if I'm looking at the upside, I am considering the possibility for a rebound from this upside line. At the moment, we're kind of seeing this stalling moment here. We're getting a hold up, so that's great. Look, this upside line is a very tentative one, because maybe it's drawn this way, maybe it's drawn that way. So it's really subjective. Every trend line, every line, anything that you draw is subjective. Anish, yes, risk management, yes, difficult to find. Yeah, of course. Especially, I would say this way, especially when you're trying to trade a small account, that's the problem sometimes. So, unfortunately, as much as they say that you can trade small, it's a little bit of a difficult one when you're trying to trade small, because with smaller accounts, you try to, psychologically, you try to gain a significant amount straight away, and you want to do that, but this is what actually brings you down very quickly. So for example, if you have like $100 in an account, right, you're thinking, oh, it would be great if I can make $50, like on top of it, because that would be like great, but that's 50%. Not all hedge funds make 50% in a year. So how you're trying to do that in a day, or that's the problem here. That's the psychology. And I do spend a lot of time teaching people this moment, because don't try to kind of aim for big money. There are tools, there are EAs that can do that, and there's a lot of people right now online kind of showing off their wealth, how they made it in trading and with bots and everything like that, and EAs, expert advisors. So yeah, there's, like I said, there's a lot of those right now, so just be careful. Anyway, so coming back to the Dow Jones Industrial Average. So yes, we're watching the Jackson Hole Symposium today, especially we're waiting for the speech, and this is where it is right now. So it's 14 o'clock GMT time. Check out the time on your side, and that's when the volatility could kick in. So be careful with that. Certainly, like I said, at this point, I'm waiting until we get a nice clearance through one of the sides of this this little squeeze here, this little baby triangle, if you want to look at it from this shorter term perspective. But yeah, 45,000 kind of in 100 zone. That's what I'm watching here for the upside. I want to see if we can clear that one. Jumping into the S&P 500 very quickly. So look, we reached my 50% retracement on the Fibonacci, and yes, at the moment, this is, I mean, in general, this kind of worked out. I was aiming for the 61.8, but hey, the 50% will be fine as well. But now what I'm looking at here is this. If we do, look, the 50% here on the Fibonacci retracement worked out perfectly. Amazing. We're constantly getting a hold up here for 3 days in a row. So let's see if we can actually, rebound back up. But for me to get a little bit more excited with the upside on the S&P 500, I would need to see this one popping back above the 38.2, which is on my chart roughly around the 6,381 zone, something like that. So if we do pop back above it, then yes, great, more buyers could join in here. But if we do fall below the 6,348 zone right there, 49 zone, then yes, I will consider another decline. So keep that in mind. Jumping into Nasdaq. So Nasdaq took a huge beating this week. I mean, look at this. We drifted heavily to the downside. It's mainly driven with tech. Look, Palantir was the big one, the big loser. NVIDIA is not very, let's say, not doing the best. AMD, I'm not talking about down already. This one is just a drifter to the downside this week. Google, yeah, Google basically is also drifting lower. Microsoft, let's have a look at Microsoft. Yep, everybody's near their 50-day EMAs. Amazon, similar story, everybody's declining. So the tech story this week is not the most successful one, and yes, we're seeing this of course with Nasdaq 100. Now look, we're at a very interesting spot. So Anish, I think this is for you, because again, if you do like to trade Nasdaq, this is for you. So we're resting near this upside line, and I think at this point, first of all, this worked out nicely. I was talking about this break here below this 23,700 zone. I said that if we do fall below it, my next target is this upside line, tick. Now the question is if we can drop below this upside line. If we do, look, the problem that I have here is this, that I would like to lean towards lower levels, but I will aim for the 50-day EMA first, shown as the green line, wherever it's going to be, and that's on a daily chart. So I'm going to aim for that one first. Then if we clear it, I'm going to go for slightly lower areas, and I think that the next target for me will be this one. This 22,663, and then we'll take it from there. But first, like I said, in order for me to consider downside at this point, I need a solid break of this upside line. For the upside, I would say yes, a push above this territory, above this hurdle, above this 23,261, yes, could attract more buyers into the game. Dollar index. Oh yeah, so basically, look, I mean, with the dollar index, it's very simple. We're watching the Fed Chair Powell speaking today. That's what don't try to improvise too much with it before. Again, it's we could see increased volatility. It could easily go against you. Certainly, if you manage to get the direction correctly, then congratulations. But it's a little bit of a gamble, because again, what we could see first of all a slight increase in spreads, and then like a move up and down, and basically this is what sometimes if you have a tight stop loss, then it could take you out very, very quickly. Look, for me at this point, I think that the upside scenario, to be a little bit more comfortable with that one, is is from here, from this break of this 100-day EMA. If we can clear that, we'll go towards that 200-day EMA. And well, first, look, don't get me wrong. First, I'll go for this one. Yeah, I cannot ignore this psychological 100 level. Maybe we'll stall here. Actually, you know what? Let's aim for this one first. You know why? Because maybe we'll stall here, and we'll then retrace back down. So this way, we could form an ascending triangle pattern. Who knows, you know, but then, like I said, don't rush into conclusions yet. So for now, we're watching this very carefully. Anish, I can see your questions. If someone wants to get a job in the trading space, how can one and what should one learn? Straightforward and clean, take on NASDAQ. Oh, yes. Thank you for the NASDAQ, that's first. And in terms of trading, again, it's depends on what, like trading, you know, trading at the desk. You know, you look, there are different multiple ways. There first of all, you know, you need to kind of either you need to get yourself into a very junior role somewhere, you know, with a big investment fund or something like that, you know, or the trading desk, and you know, work your ass in there. Or you know, if you want to do it yourself, then basically you need to educate yourself as much as possible, and then, you know, you can do those funding schemes, you know, but again, you need to be very careful with those. Some of those are very tricky in a way, because you know, you think that you're going to be purchasing the amount for how much you can trade, and you know, like, let's say you'll pay, like, I don't know, $200 for an account which is $10,000, but then actually the leverage, it depends what kind of leverage they're going to be offering. Is it 1 to 30, or is it, you know, or a bigger? And then the different payout schemes, because, and also how they measure, you know, success in a way as well. So sometimes it's not as straightforward as it seems. So you need to, unfortunately, you know, when you're flying solo, then you need to kind of be very careful with, you know, all these companies out there which are offering these, like, those proprietary trading firms. Again, some of them are legit, some of them are good, some of them are not very. Been there, done that. So yes, experienced that. Look, long story short, again, unfortunately at this point, try to focus not much on the trading as much as more on the educating yourself, trying to learn every little corner of the trading, as you said, space. That's what you need to do. And again, you know, you sometimes need to understand the most important thing. Are you more of a trader, or are you more of an investor? That's the, you know, that's the side. These are the things that you need to kind of consider in a way, because these two are kind of different. Anyway, but that's, like I said, this is something that I teach, and this is something that I kind of explain to people. So you know, give me a shout if you wish on LinkedIn. Dollar index. So yes, keeping an eye on this one. So for the downside, I would rather wait for a drop below this hurdle, below this upside line. And yep, if we do drop below this upside line, then yes, my next target is the 97.42, and then we'll just kind of take it from there. For now, I am keeping an eye on this one. Yes, like I said, keeping an eye on the Jerome Powell speech. So let's see what's going to happen there. The German index DAX. So it's an interesting one. I am somewhat bullish on this one. Look, I will explain why. First of all, I'm examining this pattern right here, this big candle to the upside, and these consecutive how many, 6 candles to the downside. Look, we keep on holding above this. I talked about this on Wednesday, on Monday as well. This 24,200 zone ish, we keep on holding above it, and that is just kind of pointing towards the idea that we could see a pop higher. Now, the reason for that is that whenever we see a big candle to the upside and then we get like a normal gradual correction, sometimes it's a bullish flag, sometimes it's a little something bigger like this. And whenever we see the bodies of these consecutive candles here to these correction candles, all these bodies are still within the body of the first big candle here to the upside. The next candle kind of tends to be a more positive one. So again, that's theory. That's theory. In practice, you have to wait. Very simple. Because again, look, the positivity here could come on a break of this downside line, because this is something that is still holding the index from traveling higher. It's not guaranteed that this is going to pop higher. No, because again, I can show you on NASDAQ here. We had similar story here. We were, correcting lower. It looked like a bullish flag here. Boom, to the downside, ignoring the bullish flag. The same story could happen here on the Dow, and on the DAX. And if this continues to hold, if this 24,200 zone continues to hold, then certainly there is a chance of a push to the upside here. Yes, but again, for now, we're not rushing into conclusion. At the moment, we're seeing a little bit of a decline here, so we're not trying to, play Nostradamus here, and not trying to predict the future so too much. We're watching for those breakouts. Looking at the FTSE 100 very quickly. Yep, a little bit of a correction after a nice all-time high creation. Wonderful. We got some data yesterday on Wednesday on inflation from the UK. Inflation came out on the higher side, ladies and gentlemen. I mean, this was 3.8 on both headline and core, which is a little bit of a problem for the BOE, the Bank of England, because they would need to start considering maybe hiking rates, and their current target is 2%. Their current inflation rate is around 3.8, so it's double the target of 2%. And yeah, so it's a little bit of a moment here, but I think that at the moment, I think there are rumors that the BOE might not go for further cuts. Until the end of this year. Again, is that going to be true? I think inflation will tell. So for now, we're watching this one very carefully. Anish, a lot of scammers out there selling courses and dreams. True, absolutely. Because look, it's not as straightforward. Yes, some, don't get me wrong, some are making it. I think everybody has to understand this one thing. Something that worked for, let's say, works for me might not work for you. The whole point is that, unfortunately, you need to find your own way, right? But what you do is you watch people like me, you watch other people, all these other traders and analysts. What works for me sometimes doesn't work for you. So basically, you just cherry pick information and then try to combine it into your own. And this is how it works then. But yeah, it's like I said, I know it's difficult. It's always easier just to follow, but unfortunately, well, you'll have to switch on your brain. So this is that's, I don't know, unfortunately, fortunately, but yeah, you'll have to switch on your brain and figure it out by collecting data and different information from everywhere and just combine it and create your own strategy. Let's jump into the Forex world. AUDUSD, I talked about this yesterday. I threw out an idea as well. Yes, it was a quick Forex update here. So basically, I've also on my, by the way, you can also reach out to me on my Instagram. You can also put it, I'll just throw it in the chat. This is the my Instagram account on yes, so basically you can always message me there as well, so feel free. Maybe that could be actually easier. And now look, AUDUSD, this is what I threw out yesterday in my Instagram account, and basically I said that I'm watching this little hurdle here. This is quite important. Look, again, we're watching the Federal Reserve Powell speech. And if somehow he says that they're not going to go for those rate cuts, that could strengthen the strengthen the US dollar, and we could see AUDUSD falling off the cliff further. However, if he sticks to the plan and just says, you know what, yeah, we're going to do that. We're going to do that cut in September as expected, although the percentage keeps on dropping. Then yes, we could see a reversal here because again the US dollar could weaken, and we could see AUDUSD pushing back up towards its EMAs. At the moment, let's consider this as a possible triangle pattern. This is a possible descending triangle pattern. So according to all the TA rules, this tends to break to the downside. And if we can get that drop, then wonderful, more sellers could join in. Yeah, like I said, for now, I would say this way, that if you're looking for some lower levels, then again, just kind of wait this one out. Don't rush into things because this could easily rebound and push back towards the EMAs. AUDNZD. So this week we got the RBNZ interest rate decision. There we go. On Wednesday, interest rate came out at 3%. So they did cut by 25 basis points. That's fine. That's something that, you know, was expected in a way, so it's okay. But yes, the weakness in the New Zealand dollar, it just continues. And this is what we're seeing here right now. So beautiful move higher. I'm after yesterday's correction, that was great, I know, but the 1.1030 held nicely. So we're now rebounding back from that area, pushing higher. Let's see if we can reach the upper side of this. Look, potential rising channel, because this is not picture perfect. This is something that I just decided to draw because of the because of this power, you know, just kind of, maybe it's going to be a rising channel. It's not confirmed totally, it's just an idea. So I'm watching this. Let's see if we can confirm this. Basically what I need here is that a touch of this upper side here. If we could get a hold up near this upside line, then, or should say upper side of this potential rising channel, then we could see a drift back down. So, but for now, I'm leaning towards the downside as long as we stay above this hurdle right here, this 1.1030. Look, oh, by the way, Anisha, gold is looking like it's getting ready for a big move. I think the downside. What's your takes, sir? Look, commodities, I will jump into. So first, I'm doing always in the MarketsTalk webinars. I'm doing indices, Forex, then commodities, and then cryptos for dessert. So I'll jump into that in a bit. So, but yeah, thank you very much for your question, Anish. I'll get to that in a moment. So AUDNZD, yes, still looking for some higher levels as long as we stay above this 1.1030. AUDJPY, rebounding, that's fine. Our risk on, risk off monitor here is showing us that it wants to go up again, but you know, unless it pushes back above the 95.74 territory, then I'll consider a move higher. NZD/USD, just a quick glance. Yes, perfect touch here, perfect reach of my target, 0.58 zone. I talked about this, so this is where I rest and I don't do anything else. This is great. It was a good result. Let's see what's going to happen next. USDJPY, so yes, beautiful rebound from this upside line. I talked about this. Also beautiful rebound from the EMAs, the 50 and the 100. So that's great. We popped above the 200-day EMA. Look, I would say this way, that as long as we stay above the, this upside line and the EMAs, there is a good chance for this one to push higher. This upside line no longer needed. That's it. We're done. I think that now is just this that we're watching. So again, some of these levels, look, could be the case. Yep. So we're clearing an important 148.45 zone. So if we continue to trade above it, I'll lean a little more towards the upside. Jumping into USDCAD very quickly. Great. We got the Canadian inflation numbers this week, which came out a little bit on the higher side, if I'm not mistaken. Let me just double check. Sorry, the headline came out on the lower side. Core year-on-year came out also on the lower side. Yes, so yeah, we came out on the lower side, so that's not very helpful for the Canadian dollar, and that's why we're seeing some weakness here in USD CAD. Not because the US dollar is very strong. No, it's mainly the weakness of the Canadian dollar. USDCHF, just a kind of copy of the DXY, but trying to make its way back up here. Look, this hurdle is very important here, the 0.8025. If we drop below it, I'll lean a little bit more towards the downside, but up to this upside line. Yep. EURUSD, very quickly drifting lower, so the US dollar is strengthening a little bit, but look, we're still above the 50-day EMA. If we continue to trade above that, then certainly I would say we will if we continue to trade above this 50-day EMA, I'm going to lean a little bit more towards the upside, because this has been a nice little correction before another possible leg of buying. If we fall and we do stay below the 50-day EMA, I'm leaning towards the downside. EUROJPY, okay, look, EUROJPY is an interesting one here. So we're stuck in between these levels here. This is the low of July of 31st, and this is the highest point of July of this year. It's not the lowest point of July, no, but there's a good area here. So this is the lowest point of July, the lower one here. Look, I need a clearance through one of the sides here. If we're trying to narrow it down a little bit, then maybe just a clearance through one of these levels, and then we could continue considering the next short-term directional move. GBPUSD, very quickly. Now look, I talked about this, and I threw out the idea here on this video here, and I talked about this on Monday, on Wednesday as well. After we were like rejected from this little area around the 1.3585, I said, look, we could see a little correction back down, but I'm keeping an eye on this little hurdle here near the 100-day EMA, because maybe, just maybe, if we do drift further south, maybe we could find support here somewhere around this 1.3370 or this 100-day EMA shown as the blue line. If we do, then we could rebound, and basically maybe we're forming something of an inverted head and shoulders pattern, with the left shoulder being here, head, and maybe the right shoulder. Again, this is just an idea, a little bit of speculation. This is something that, like I said, something that could be, it could be an interesting one here, it could be like, but if it is an inverted head and shoulders pattern, then okay, look, it's up to your risk appetite in a way. If you want to start, jumping in here, or actually you want to wait for a breakout of the so-called neckline. If we can, if you want to break through the so-called neckline, then okay. That's also a good option. Anish, I can see your question, why CHF outperformed every currency. Look, CHF and Japanese yen are the two safe havens, which where when the market reverts to them when everything is, there is uncertainty, and we had a lot of uncertainty, tariffs, and in the first half of this year it was just tariff, and nobody knew what's going to happen. So they needed a weaker dollar for exports. Swiss franc was the stronger one, and everybody, like I said, jumps into Japanese yen and Swiss franc into when the times are bad in a way, or there's like increased uncertainty. Although the stock market has been elevated, still some investors do decide to jump into those currencies, and they abandon the euros, the pounds, the dollars, and they jump into those. So this kind of can give you a little indication that if there is still demand for Swiss franc and Japanese yen, then maybe the market is not that bullish. Let's see. Anyway, let's jump into gold. Gold is, I talked about this and I said to you, look, maybe we're forming an ascending triangle, maybe we're forming a symmetrical triangle. Either way, we need confirmation. Look, if we do break this upside line, taken from the low the 15th of May here, and we also fall below this little hurdle here, the 3,315 zone, somewhere around here, that's near the lows of this week. If we do drop below this, then yes, I'm going to lean a little bit more towards the downside, and then we'll take it from there. For the upside, I would like to see a break of this downside line, a push up of the 3,375 territory, and then yes, more more buyers could join in. So we could aim, my target in general is this 3,430, 50 zone, and I think that this is a good area of resistance, very strong one. If we somehow eventually break it, then okay, great, we'll go higher. But at this point, we need to deal with some obstacles here first, before we can actually even consider a move here. So at the moment we're watching this decline, let's see if this is not going to end up breaking this upside line. But for this break, we would need to see the Federal Reserve kind of saying that they're not going to go for the planned cuts in September. So so yeah, keep that in mind. Silver, a little bit of retracement. Look, I'm not loving silver at the moment. It's not the best one here, so it's a little bit tricky. So yeah, I'm just gonna leave it for now, but maybe I'm just going to take more of a conservative approach here. And if we do pop above the 38.72, I'll go a little bit higher. But if we do fall below the 37 territory or 36.95, then I'll lean a little bit more to the downside. Palladium. Palladium it's a very interesting spot here, and look, I'm still watching this one. We're flirting with this upside line with the 100-day EMA, with this 1,106 zone. If we continue to trade above it, there is a chance of a reversal back up. But if we're struggling with this and we break this upside line, then yes, I'm gonna lean a little bit more to the downside. Platinum, very interesting sideways action here. A little bit annoying, to be honest, but hey, we're waiting for a drop below the 1,288 zone in order to start shifting our attention to some lower levels. But if it's gonna push above the 1,377, then I'll consider a move higher. Copper, copper is, look, after this major decline here, it's kind of stabilized, and initially I was thinking that maybe it's gonna form something of a bearish flag, and maybe it's not finished in forming the bearish flag, because of this big decline. Maybe we're going to get a little bit of a prolonged sideways action here. I maybe going into, I don't know, already autumn, deeper into autumn, maybe we'll just see some sideways action here. So I'm not gonna, like I said, I'm not gonna rush into this, and I'm just gonna keep an eye on some of these levels. Even if we do see a crossing, again, it depends on how we will cross that, because at this point it's just a little bit tricky. It could be, a little choppy here, so just observing the price action. WTI oil, my friend, WTI oil. Look, after a beautiful move, after a beautiful break through this $65-$64 mark, I said that if we clear this area, I'm leaning towards the downside. My next target is the psychological 60 level. Now we're seeing a retracement. That's fine. So if we continue to trade below that $64 mark, I'm leaning still towards the downside, period. If we pop above the $65 mark, I'm leaning towards the upside. Why? Because why I'm leaving this kind of $1 gap here? Well, this is a very kind of unclear territory. So I just want to give it a little bit of room for maneuverability, just to see what's going to happen. Maybe it's going to give us like some spikes here, up and down here. So just want to leave it like that. Natural gas, after falling below the psychological 3 level, we continue to trade. It continues to trade below that psychological 3 level. So as long as it stays below the 3, I'm just leaning towards the downside, to be honest. Anish, what happened to copper? Good question. And I talked a lot about copper, and basically also I threw out an idea here on copper. Where was that copper? That was a little while ago, because it's an old story right there. There we go. This is was an interesting. This is called when you get into government, you can speculate the crap out of everything, to be honest. So what happened here? Basically, copper was rallying significantly because the U.S. administration wanted to impose a 50% tariff on all copper imported into the U.S. Everybody started rushing into buying. All the U.S. companies started buying copper abroad, from Australia, from Chile. and everybody was just like crazy. It was crazy demand for copper just because they thought that we need to secure it at those prices, because otherwise it's going to just continue rallying higher. It was, I think it was July. Yeah, I think it was July time, and then basically at the end, at the end of the July, yes, at the end of July, everybody was buying a lot of copper here, getting those contracts in, getting copper, trying to get into the U.S. by August 1st. All the copper, and then the U.S. comes out, says, "Oh, you know what? It's not about copper as in raw material. It's about semi-finished items, semi-finished copper products." And it changed the whole game. So basically, now everybody kind of, everybody bought so much copper. All these companies now they're sitting on the stockpile, and the demand is still the same, but you have increased the supply of copper inside the country. And honestly, like, it's just the companies are a little bit devastated here because they're taking a big hit. They bought copper at higher prices. That's first thing. They now have a lot of copper which they need to distribute, and it will take time. So that means you need to warehouse it. So warehousing is another cost. So, and also copper right now is much cheaper than it was previously, and almost like $1 cheaper, and that is a lot. And so this is, like I said, this is called beautiful manipulation of the market. So amazing. Anyway, coming back to the other commodities, coffee. It is a manipulation. It is manipulation. So anyway, coffee, my beautiful coffee, it is rallying, and look, I'm still targeting the downside line. So let's see if we can eventually reach that. But previously, I talked about the idea that if we do break the falling wedge here, and it was a falling wedge, so we could see a move higher. Well, there we go. We got the move. Cocoa. Cocoa beautifully declining, and what's important, we are near this key area of support roughly between the 7,636, 7,765 levels. So if we can clear and stay below that, I'm leaning towards the downside. Wheat, jumping back above the $500 mark. Now this is something interesting. So yes, we pushed back above the $500 mark, and that's a psychological level. So in a way, it seems like the bulls don't want to give up, that kind of significant area. So let's see if they can keep it alive above the 500. And if they can, then yes, I'm leaning towards higher levels. Sugar is forming something of an ascending triangle pattern, and let's see if this is gonna end up being that. So something among these lines, basically. So if we can clear the $17 mark, then yes, I'll go higher. But at the moment, we're watching this upside line. If we continue to trade above that, then yes, there is a chance for a move higher within the formation here. But again, just be very careful with that. Cotton. Okay, this looks like a bullish structure. We're in the falling channel. The prevailing trend was to the upside, so the greater chance for this one to break out is to the upside. However, while we remain inside the pattern there, we could still drift to the downside. So we could also still drift below this 67 mark here, and we can fall below all the EMAs, and we can end up testing the lower side of this. So don't rush. But also another thing supporting the upside scenario is the fact that maybe we're forming a bullish pennant here. So we have a pole, we have our potential pennant here formation, so maybe it's that. So but either way, a break of this upper side of the falling channel is needed. And finally, for dessert, very quickly, let's jump into the crypto world. Let me just double check here. Bitcoin. So ladies and gentlemen, let me actually double check here something that I need to do very quickly. Ladies and gentlemen, Bitcoin. So Bitcoin is, yes, it found good support near that 112 zone. I talked about 112 territory, 112,000 zone a while ago, and it was acting as a good area of resistance. Now it's taking the role of support. Need to kind of very quickly double check something here, because again, I think something is happening in the market, in the German market. Let me just see this action here. Okay, yes, this is what's happening with interesting moments happening here. So yes, we are pushing or at least trying to push back up here, and that is in a way great. What can I say? Great. Like Tony the Tiger. Tony the Tiger, great. Okay, let's see if we can. This is going to end up pushing to the upside at the end of the day. Anyway, coming back to the Bitcoin situation. So the 112,000 held nicely, amazing. Now the question is. Can we sustain this? Can this be sustained? Can this 112 zone be the one to, constantly monitor? And can it be the one that is going to be, let's say, the ground from which Bitcoin will fly up high again? Look, personally, I would like to see a bigger decline. I would like to see a bigger correction back down. If we measure this from this rally here, which we had in April, from this low, which we saw in April here, and all this rally until the all-time high, then we're currently resting around the 23.6 perfectly. 23.6 area here on the Fibonacci retracement, we're bouncing around that. So, okay, look, it's fine. Now, we need to see if we can travel towards that 38.2. But of course, traveling to 38.2 does present some obstacles on the way lower. And we do, first of all, if we're looking at my chart here, we have this 112,000 zone. Okay, let's say that's our breakout point. Then we have the 110,550-ish. Roughly around here. It coincides nicely with the 100-day EMA on my chart, on my daily chart here. That's another target. But if we clear that one, well, I will then certainly be a little bit more lenient towards the 38.2. So before we could start getting comfortable with 38.2 here on the Fibonacci retracement, we need to clear some of these areas. And at the moment, we're getting a hold up, near this 112 zone. So if we do rebound and we do push back above the 50-day EMA, because it recently provided fantastic resistance, then I'll consider a move higher. Now, are we forming something of a inverted head and a head and shoulders pattern, with the left shoulder being here, the head, and maybe we could form the right shoulder? But again, it could be a complex head and shoulders, because the left shoulder here, for example, is very prolonged. So that's why it's not as clear as on GBPUSD, which I showed you, the inverted head and shoulders. This one is a little bit subjective, to be honest. I mean, maybe it's going to be a range, actually. Maybe it's not going to be a inverted head and shoulders pattern, or sorry, a head and shoulders pattern, not a normal head and shoulders pattern. Maybe it's going to be a range again. So, we need to kind of keep that in mind. So something like this, basically. And if that is the case, then we're probably looking at something. Let me get rid of this Fibonacci. We're probably looking at something like, a little bit of a prolonged movement here. So, inside a box or something like that. So yeah, we could see another push back up, but again, like I said, I'll consider the push back up if we do climb above the 50-day EMA. Bitcoin Cash. Oh, by the way, NASDAQ and BTC trade the same way. According to this, NASDAQ can also go down to the previous low. NASDAQ and BTC don't trade the same way. Unfortunately, Anish, I won't, I will have to disagree with you on this one. They do not. Let me just so if we're looking at, let's say I'm going to change it to a line. This is Bitcoin, and let me add NASDAQ. Where's my NASDAQ? US 100. There we go. So it's not really, depends on how you're looking at it, and really, okay, the dips, these shocks in the economy, these happen across all of them. You can say, but it's more of at the moment, Bitcoin is trying to replicate something of a bigger, but a bigger kind of behave like an asset, like an investable asset. But in a way, if you want to, let's say, if you're going to buy NASDAQ and you're going to sell, or so to say, you're going to buy NASDAQ, and for example, you're going to sell BTC, you're trying to kind of hedge yourself in a way or something like that. But for the future, then you're not gonna get the normal results in a way. Again, it's it needs to be tested. Don't get me wrong. I'm not gonna try to improvise here too much, because again, if you can prove to me that they do, let's say with trades, on a demo account, if you enter one, and then you enter buy on Nasdaq and you enter sell on Bitcoin, and if you can see correlation to this, then okay, great, but I look, the fact that Bitcoin, let me get rid of this, the fact that Bitcoin is becoming more of a product where where people are trying to, into which people are trying to invest, and trying to be a stable product, because we have our ETFs now, and then yeah, it could become more kind of more closer to indices. Or again, it depends on which path it's going to take, because is it going to be more closer, is it going to be closer to indices, or is it going to be more closer to currencies or commodity or whatever. So at the moment, it's a little bit unknown. So I wouldn't say it doesn't trade the same. So it might experience, let's say, overall shocks, but the same as other instruments do. But again, it would be a little bit misleading to say that it is the same. So again, but if you find the strategy where you can utilize the two, honestly, be my guest. Feel free to do that, in just as long as you have your risk management in place. So Bitcoin Cash, very quickly, Bitcoin Cash pushing back up, or at least trying to. So we found good support near the 50-day EMA. Great, rebounded, pushing back up. Well, let's see if we can stay above the hurdle here, above the 563 territory. If we can stay above it, then yes, great, more buyers could join in. For the downside, a drop below the lower side of the rising channel here could do the trick for a few more sellers. Again, I'm not rushing into conclusions yet, but at the moment I have a data set we'll share with you. Sure, honestly, feel free. Anish, I'm more than happy, because maybe you will show me something that I have missed. So I never say that I'm the most correct person in the world. I'm also learning from everybody. But hey, feel free, do that. I'll let me know. Yes, the 563 territory is an interesting one here. So if we can clear this and we can stay above this, then yes, great. I'll go for some higher areas. Ethereum, yes, a bit of a choppy session here, but the fact is that after we tested the 50% on the Fibonacci retracement, we rebounded, and we're resting on the 38.2. If we continue to do so, then yes, there is a chance for a push higher, but I'll get a little bit more comfortable with the upside if we clear the 23.6. For the downside, I would like to see a drop below the 50% here on the Fibonacci retracement, and I would like to see a break of this upside line, and then we'll take from there. Ripple is drifting lower, back down again, so we remain below the psychological 3 level. So hey, I think the next target here, it could be this 100-day EMA near the 2.72 area. Litecoin, very quickly, we still remain below this broken downside line. It initially acted as a good area of resistance, then we broke it, and then it acted as a good area of support, then we broke it down. Now it's acting as a good area of resistance again. Let's see if we can stay below that, and we can continue trading below this hurdle. If we can, I'm leaning towards my EMAs. Dogecoin, very quickly, Dogecoin stuck. Not much to say here. Look, my downside scenario is on a break of this 200-day EMA, but my upside scenario is on a break of this downside line. Polkadot, I like it, but yeah, it needs a little bit more confirmation. At the moment, it's just a little bit on the you know, okay. Overall, I'm somewhat bearish up until this upside line, and then if we can break it, okay, great. I'll lean towards the, you know, the downside, but I mean, if we do rebound, then we're, you know, confirming a nice little symmetrical triangle pattern here. And finally, Tron, my beloved Tron. Recently, it became my beloved Tron because again, it's very technical, and it rebounded beautifully from this upside line. Then I said if we do push and stay above the 0.3538 zone here, I'll continue targeting the upside, and I'm gonna do so. So for now, long story short, I'm leaning towards the upside. Let's see if we can continue trading above this area. If we can, then yeah, I'm leaning towards that 0.3682 again, and then we'll go from there. For the downside, I need to see a drop below the 0.3439 zone right here in order to shift my attention to some lower levels. Ladies and gentlemen, that is a wrap. Thank you very much. First of all, Anish, thank you very much for your comments. Thank you very much for participating. Thank you very much, everybody who was watching this show from the beginning till the end. I really appreciate that, because again, I do understand that time is important, and, you know, and like I said, I do value your participation. So thank you very much. I hope you enjoyed it. So everybody, as always, ladies and gentlemen, like I said, as I already mentioned several times in this webinar, you can always reach out to me via different channels. That's fine. Just explain who. Just don't add randomly. Just explain who you are, and then kind of, you know, and then we can go from there. But thank you very much, everybody. I hope you have a beautiful trading day. Don't forget about the increased volatility today that could happen at 14 GMT time, 14 o'clock GMT time. So yes, be careful, and yes, manage your risk accordingly. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Monday. Yes, Monday at the same time. Bye-bye.